Well, joining me now to share an expert's view on what the oil markets are telling us is Viktor Katona, lead crude analyst at Kpler. Welcome, Victor. Let's turn first to the US. Gasoline prices are lower than a year ago, but summer demand appears strong. What picture are you getting of US demand and of the wider US economy?
Well, I think that the oil markets in general and the US oil market specifically needs a cooling off of the US labor market as soon as possible, because everything looks very, very strong and robust right now. Gasoline demand is stronger than it was last year, and diesel is still not plummeting. But we are heading into a territory, and very soon summer peak driving season is over. And then we will see the first marks, the first scar marks, I would even say, of demand destruction, which is inevitable. And we think that diesel in particular will be suffering in the second half of 2023. Gasoline will still be all right, but the diesel market is a very good proxy of how the economy feels. And it very much seems to be going towards a decline.
We mentioned there this week's move by Saudi Arabia, Russia and indeed Algeria to extend production cuts. Why? And are they isolated in putting through this move?
Well, isolated might be a strong word, but in general, they seem to be the only ones who are ready to be making a production cut. Saudi Arabia has found itself in a situation when it pledged to be producing 9 million barrels per day. And over the last 15 years, there were only 2 occasions when it did so. And that was the great financial crisis of 2008 and peak COVID. So it finds itself in a situation when it's the only country to be cutting production in earnest. And if things go even worse than they are right now, where would it cut further? 8 million, 7 million? There's no historical precedent for this. And the other OPEC members don't want to join Saudi Arabia. And this is a huge problem. Saudi Arabia needs the others to get on board and to commit with pledges. And they haven't done that so far. So there will be a lot of pressure from Riyadh towards the neighboring countries over the upcoming months.
And OPEC likely to be maintaining an upbeat view on demand growth next year when it publishes its forecasts, if it does do so next week. Are you upbeat?
Not really. I'm upbeat about the second half of 2024 because I think by then we would see the first signs of the macroeconomic environment improving. But I think that recession will hit the US in the fourth quarter of 2023, and with a time lag will hit Europe as well. And those will not be good months. Those will be very tumultuous, difficult months that we have to persevere through. And the real light at the end of the tunnel will only come in 12, 14 months. The upcoming period is really difficult, and the winter will have a lot of downside in general to oil prices.
OK, Victor, it's been great to hear your views today. Viktor Katona, lead crude analyst at Kpler. Many thanks for being with us.